It's such a pleasure to be joining you on this very, very special edition. We kick off our programming. We're going to be non-stop when India makes the tryst with GST at the stroke of midnight. When, of course, the world wakes up to freedom, like Jawaharlal Nehru said. This is going to be economic freedom of sorts. India will finally be one nation, one tax. There are many contributors to this, many architects of what the goods and the services tax will be. But for the next 2 hours, I'm going to get a panel of experts right here, throw the jargon out and see how your life gets impacted. I'm going to be joined by a very special panel that's going to be joining me: Satya Poddar, Bhavna Doshi, Shrikant Kamat, Rohit Jain, Sandeep, Chilana, and of course we've got Abhishek Rastogi, Mahesh Jaisingh as well over the next 1 hour, in fact more. But for now, I'm going to take it across to a very special guest who's joining us on ET Now. And all of you, please bear with me because I've got on ET Now at this hour right here, India's Revenue Secretary, Dr. Hasmukh Adhia, with us right here. Thank you very much, Dr. Adhia, for being with us. We are less than 24 hours away from the GST. This is supposed to be a big reform for the Indian economy. How much of a game changer will this tax reform really be?
Well, this is a tax reform which the country has awaited for 10 years, and it is not for no reason that people are calling it a game changer. It is actually going to simplify the tax processes quite a bit. It is going to remove the inefficiencies and redundancy in the economy. It is going to give effective protection to the local industry. It is going to be a booster for the exporters. So in all sense, we can say that it is going to ease the burden of traders and manufacturers. It is going to bring better GDP for the country, and it is going to be also resulting into better compliance of taxation for the government.
Dr. Adhia, I think a lot of people are very worried about how easy will it be to comply with the GST, and people appreciate the fact that you've given this 2-month window for things to settle down, for the teething trouble to get over. But if the pain does persist, are you willing to extend the relaxation period if the pain lasts longer?
In fact, we have taken enough care to see to it that there is no pain for anybody. We have given enough relaxation initially to people. And we would expect that if there are any pain points, even now after the rollout, we would like to sort of take instantaneous decisions, immediate decisions, and we would be ready to give relief to people if there is a need to do so.
All right, so people will want relief, and we do hope that your 24-hour helpline and all of you at large will be willing to offer that help. But I just want to quickly get the macro questions out of the way before I kick off things with the panel. You had said a couple of days back to me that the government needs to watch out against any inflationary pressures that may come on account of the GST. My question there is that, have you made your peace with the fact that to begin with, prices and costs may actually go up and things may ease over the long term?
Well, it could be inflationary if the benefit of reduced taxation is not passed down to the customer. But I would appeal to all the big companies and all the supermarkets and all the big dealers and wholesalers and distributors to sort of take care to see to it that all the benefits that they are getting in terms of removal of cascading of taxation, in terms of getting input tax credit of all the inputs which they are using, they should pass it down to the customer, so that initially also there is hardly any inflation which is created. But we have taken enough care in the design of the rates, and if we have a theoretical model which works, that everything is passed down to customer, then we should see significant reduction in the inflation rate by the end of the year.
All right, we should expect reduction in the inflation rate by the end of the year, and many people believe that in itself will also create more elbow room for monetary policy to ease. But as we go forward and as we have our own tryst with GST, by when do you think the council will be prepared to review and revise the rates and also the slabs? By your own estimates, rates should come down. I mean, prices should come down by the end of this year. Will that create elbow room for the council to review rates? I mean, consensus has been very tough to arrive at.
There is no question of reducing without any reason. But if there are issues which are really creating pain, and if we also made some mistake in the calculation, then of course the chairperson of the council has said that we would be looking at them, but it won't be as frequent as people believe it will be.
So I'm going to take a quick direct question with you before I let you go. A lot of people out there in Indian industry, and also the former finance minister in a conversation with us, Mr. Chidambaram, said that the anti-profiteering clause is not just draconian, may lead to tax harassment, but it's also anti-markets, it's anti-market economy. How will you assuage concerns that are coming in specifically on that one clause?
We have no intention of watching anybody's accounts also, leave alone their lives. And the question is ki it is only to be used in case if there are major defaults and where the consumers feel cheated, the companies or the builders or the contractors, they try to play smart and the people are being misguided. It is only to take care of such eventualities that the anti-profiteering provisions are there.
So as we take leave from you, what's your message from Indian industry that's getting ready to change how businesses have been done in this country for all of these years, sir?
My message to the industry and the trade is that don't have the fear of unknown. The unknown that is coming is something which is not unknown to us. We have been designing it for last 10 years. We have tried to see to it that it doesn't create any pain for you. It is something which is going to prove to be win-win for everybody, and so they should not resist it based on misinformation. There is a lot of misinformation being spread by some of the vested interest groups, and we should not go by those misinformation. We should try and verify the correct position and then embrace it with love and with affection.
All right, embrace the tax changes with love and affection is the word that's coming in from India's Revenue Secretary, one of the key architects of the GST. Thank you very much for sparing time and speaking to us this evening. Dr. Adya, they're in conversation with us at ET Now. But let me take it across to a panel of experts who understand taxes and will be answering most of your queries here and will break down and demystify the GST, so to say. Satya Poddar, let's begin this round with you. One of the things that the Revenue Secretary said has really stuck with me, at least, I keep going back to it. What are people scared about? I mean, why is there so much of nervousness? Why is there so much of anxiety, the apprehension? Is this all on account of the fact that there is a fear of unknown? I mean, GST is an unknown devil, so to say, and which is why there is this anxiety.
I agree with Revenue Secretary that much of the fear is really based not so much about the actual design features of the GST, but the fear of the unknown. The fear of the unknown relates to very complex compliance requirements, uploading of the invoices, doing everything by digital platform as opposed to manual platform. And there are also a number of changes that are taking place on which the government itself has been very slow in releasing all the detailed guidelines. For example, the rate structure itself, what the tax rate will apply to which goods and which services, it's only in the past 7, 8, 10 days that clarity has been provided. Even now, there are lots of questions on which there is no clarity. And as a result, the business community is really saying, how are you going to apply the tax on July 1 when we don't even have a clarity at this stage? But this thing is unavoidable. My own feeling is anytime you introduce a major reform of this nature, there are bound to be questions which need to be clarified till the 11th hour, even beyond the 11th hour, even beyond July 1, those questions will need to be clarified. So I personally believe that much of the fear that is in the community is largely based on misinformation and fear of the unknown. And there are lots of other reasons which have not even come out very well, which in fact could be very undesirable features of the GST. The most undesirable feature, the complexity of it. And that complexity doesn't have to be the compliance system. Complexity has to do with deciding what tax rate to apply to which goods. How do you compute your input tax credits? And which item will be reported and which column of the tax return. We have a group of 400-500 people in my firm. And we are constantly exchanging emails and WhatsApp messages. How do I treat this line? How do I treat that line? And that's the process which is frightening. But my own feeling is that let's look at the positive sides of the GST. The three important features of the GST, one is harmonization across the country. Second is digitization. And the third is a tax structure which is more rational and better than what we have today. Now, there is absolutely no doubt that the government gets A+ in designing the GST because it is completely harmonized across India. No deviations are allowed in any corner of the country from the common design. Number two is digitization. Now, in the beginning, it's going to be painful for the country to move on to the digital platform, but once they adapt to the digital platform, this will ensure completely nameless, faceless administration. And if you can minimize your interactions with the bureaucracy, this will imply no corruption, and you get on with your life in paying the taxes and collecting them from the consumers. The third part, which is the most complex one, and that's where the government does get a failing mark in my view, is the structure of the tax system. And the structure has to do with the multiplicity of the tax rates, the system of input tax credits, the lots of provisions which block the input tax credits, which should not be blocked under a normal rational GST. And that's where the focus will take place soon after July 1, with the harmonization aspect behind us, with the digitization aspect behind us. Government should move on to simplifying the structure in terms of rationalizing the rate structure, removing blockages of input tax credits.
Okay, just hold your thoughts there because I'm going to get in Bhavna Doshi into this mix. And Bhavna, one of the things that Satya Poddar said to begin with is that, you know, there is this, okay, Bhavna Doshi is still to join us, I'm sorry about that, but Abhishek Rastogi, okay, Abhishek Rastogi, if I may throw this to you quickly. One of the things that Satya Poddar said is true. The fear of the unknown is because there are companies out there who have never done business on a digital platform. Is the protest, is the unrest, is the anxiety really coming in from people who are part of the unorganized industry? They haven't made a shift to the formal sector. You know, their books have had no interface with an ERP or a software, so to say. Is that what they are fearing really?
See, I think to a very large extent, I agree what Satya has mentioned. And I think the fear of the unknown will remain in the system for quite some time because people right now do not know, and a lot of people do not know even the provisions. Yes, it is right that to a very large extent, the rates have been finalized in the recent past. Last 7 to 10 days, we have seen a lot of changes in the rates. The notifications have come recently. But I think we should also take into consideration the representations which had gone to the government. So there were about 133 representations which had gone to the government. And, you know, on your show only we had discussed when at the unexpected time the government had released the tax rates. So I think to a very large extent that announcement with respect to the rates had happened. But of course, after that initial announcement, there were a lot of representations. There were a lot of, you know, issues which were discussed at the North Block. And to give benefit to a lot of these sectors, both in goods and services, most of these representations were considered, and hence the final rate was thereafter agreed after these representations were examined. So I think the credit should definitely go to the government because to get so many states on board to have consensus on so many rates, you know, has been a challenge. Now, of course, you know, multiplicity of rates remained a challenge because we have spoken in the past about what happens to the two classifications of 12% and 18%. And if we see that there are not many items in the 12% rate, so could there be a better structuring of the tax rate? That remains a billion-dollar question. But yes, with that multiplicity, I think we will have to move ahead. I think the message which should go to the industry is what Hasmukh Adhia rightly said, that, you know, the government has worked pretty well on designing the structure. They know what exactly, you know, is in the benefit or in the interest of the trade. So I think from that perspective, the message which should definitely go to the trade and the association bodies is that the government has worked on it, the government is working on it, and the government in the recent days ahead would again, address a lot of these concerns. So based on that, yes, there would remain some fear of the unknown, but to a very large extent, I think the fact that we are meeting this deadline, we are implementing this on 1st of July, and mind you, 1st of July is a very important date for us, because what happens by implementing it on 1st of July is that the government gets some time from now till the next budget. And even if the financial year is not changed or it remains the same, the government will have some time to address a lot of these concerns, either on rates or on procedure or on the statute part. So I think with that in mind, it's a very good thing to happen.
Okay, just hold your thoughts there, because I'm going to get it involved with the viewers here. You just simply have to go to involve.in, post your queries there. We'll also be taking viewer queries live right here on ET Now on the phone. But one such query that's coming in is GST registration. It's coming in saying GST registration in another state only for rent from commercial properties above 20 lakhs. What will be the primary address? Sandeep, Chilana, you want to take that point?
Sure. So, see, as far as the design of GST laws is concerned, if a service is rendered, the renting services are being rendered in a particular state on which taxes are payable in that state, it would be mandatory to take registration in that state to discharge GST liability. Now, what would be the primary address? It should ideally be that property on which is given on lease, on which the registration can be taken. But if you have any other office in that state, you can use that office also to obtain registration. But otherwise, that very property which has been given on lease should be sufficient address to take the registration.
Okay, so I hope that that query is clarified, and I'm wondering if we have... Okay, I've got a viewer query coming in on the phone line, and Mr. M.R. Manohar joins us all the way from Bengaluru. Thank you very much for being with us on ET Now. What's your query? Go ahead.
Hello. Hello.
Mr. Manohar, go ahead with your query, please.
Sir, I'm a retailer. I'm doing retail medical shop business under ownership, under proprietorship. I'm having a turnover of around 25 lakhs. Then I'm also having a rental income, a commercial rental income of 3 lakhs per annum. Shall I opt for right now to composite tax?
Okay, Rohit, Jain, you want to take that question? He has a retail business of a medical shop from where the turnover is 25 lakhs, commercial rent of 3 lakhs. Should he be opting for composite?
Yes, so I must tell you that the composition scheme is between the turnover of 25 to 75 lakhs, but most importantly it is available only for the supplier of goods and not available to a supplier of services, and your renting of a property would be considered as a supplier of service, and therefore composition scheme won't be available to you because you are not only supplier of goods. The other important point is that if you have rented this residential property, then there is an exemption for supply of renting of residential property, and then only what is taxable is only the goods element. There one may still evaluate, can you go under the composition scheme. But if you are a service provider and a supplier of goods, then the composition benefit is not available to you because you are not in the bracket of 20 to 75 lakhs remit as being a supplier of goods only.
Okay, I hope that clarifies your query, that your rental income that's coming in from the commercial rental income, that's a service and that is not a good. That's a service that you're really rendering. I've got one more question, and that's coming in from involve.in. It's been asked by Rashmi, and let me throw this to Shrikant Kamat there. If my grocery bill per month used to be 2,000 pre-VAT, will it be 2,000 plus 18% now?
Yeah, we have to see basically what are the groceries we are talking about, because if we are talking about unbranded, then obviously there won't be any element of tax. So effectively the tax component should not really worry the householder, because largely unbranded groceries and all goods would be tax free. But if we are going to talk about processed food, then definitely there would be a higher element of tax. So if that 2000 does not contain any kind of a processed food purchase and it is purely grocery, so I think there should not be any cause for worry.
Okay, there's another question that's coming in, and this question is about registered GST in Delhi. I'm unable to register in Haryana with the same email and mobile number. Why do I need different contact numbers? This has been posted by Kumar in our interface involve.in. You can keep sending in your queries there, and I'm going to get viewers to keep answering them. You want to take a shot at that, Mr. Jaisingh? He's registered in Delhi, finds it very difficult to register with the same number in Haryana. Is there an issue there?
I think this is just a technical glitch, and I'm sure if he addresses a query to the GSTN and the government has given contact details for redressal, I'm sure his issue will be addressed.
Okay. There is another viewer query that's coming in, which is about I import Chinese products and sell to local merchants. Will my purchases be highly priced now? That's a view that's coming in fact, a question that's coming in from Mr. Fanish on our involve.in page. And let me throw this to Abhishek Rastogi then. Abhishek?
See, as far as the imports are concerned, one thing remains very clear, that apart from the BCD, which is a cost, all other things, all other taxes, etc., get subsumed in IGST. Now, IGST can be simply utilized either for the interstate sale or the intrastate sale. So which means that to a very large extent there would not be any tax cascading, because a lot of this would go into the procurement tax credits. So from that perspective, I think there should not be any loss in case of imports. In fact, the detailed computation for the import taxes which was required in the earlier regime, and some of it may be used or offsetted, or the other part may not have been utilized, etc. All those challenges go off. So from that perspective, I think it should not make any big difference in case of imports.
Okay, so that should not be a big difference as far as imports are concerned. I'm given to understand I have a call. You want to add to that query at all? Yes. We'll just have one more view on that query before I move forward to a phono. And I'm given to understand Neelima from New Delhi is joining us on the phone line. Go ahead, Sandeep.
Agreed with Abhishek. The one other aspect which I would like to highlight is that in the current regime, a trader who is importing and selling is not eligible for the credit of the countervailing duties which they are paying, which in fact is a cost. Now that when it gets subsumed in IGST, and IGST being fully creditable, in fact, for most of the imported traded goods, the landed value of import should, after taking into consideration the credit, the import should become cheaper. And that is why a lot of industries have been talking about that domestic manufacturers may not be at par with the imported goods, and they would need some protection.
Okay, they will need some protection. But let's take this across to my caller on the line, and that's Neelima, who's joining us from New Delhi. She has a query regarding her business. She's into consulting. Neelima, take it away.
Yeah. Actually, I provide service to for filmmakers from abroad with finding a location or transport or doing some research for them. Now, my turnover has never exceeded more than 15 lakhs. But I voluntarily applied for GST a couple of months ago. Now I'm told if you have a turnover of less than 20, you don't need to pay. So I just need to know the position.
Bhavna Doshi, you want to take that question? And her question is very simple, and I think that question will be coming from a lot of our viewers. Her consultancy turnover is about 15 lakh rupees. She's paid service tax previously. She's migrated to a GST number. She's now in that exempted list where, you know, she doesn't reach the turnover of 20 lakhs. What does she do?
Now, she has an option. She can continue to be registered under GST, or she may opt out. That depends on whether she would wish to take the input tax credit and recover GST from customers. Sometimes her clients may require or may like that she charges GST, in which case she will be able to claim input tax credits. Now, if she doesn't have much cost and she is not really very keen on claiming input tax credits, she need not register, because in any case, once she registers, she'll have to do the compliances.
Oh no. Okay, so you have a choice, Neelima. You can either stay put in the GST network or you can opt out. But sometimes your clients may want to have you in the GST network for the input tax credit. So I think the voice from our panel will be that you should be a part. You want to add to that, Mr. Chess?
Absolutely. I think the valid point is which you made, that some of the customers itself would prefer that there is a tax that she charges, because if the supply is to a business customer, there would otherwise be an unregistered dealer purchase tax, and therefore a lot of large business, buyers of services would say, I would rather prefer my service providers to be registered, because the tax that you charge is not really a cost for the buyer of the service.
Okay, there's another query that's coming in on involve.in, and you can keep sending in your queries. You simply have to log into involve.in, post your GST query for us, and we'll make sure that our battery of experts who are right here with us from 6 to 8 p.m. this evening, they will continue to answer all of that. This query is really coming in by NM Mathur, and he says, will the manufacturer of artificial jewelry need to pay GST for every item separately, like metals, gems, and everything else that goes into the making? Mr. Poddar?
That's news to me. My own impression is that either it's taxable as a non-precious jewelry or precious jewelry. Precious jewelry has a tax rate of 3%, and all other items will be taxable at 12 or 18 or 28%. I don't think there's any provision for unbundling the components of the jewelry into different parts. So if it's purely artificial jewelry, it should be taxable at the most likely tax rate will be 18 or 28%.
Okay, that's an important clarification. Just hold your thoughts, people there. I'll have to take a really quick breather. I come back and we will continue to track all your GST queries. We will also ask specific questions of our experts who are right here with us on ET Now, and I'm going to come to that in just a bit. But for now, it's a quick breather on ET Now. Okay, let's take this across and quickly discuss a few things before I can get in more viewers on board. And let's start with you, Bhavna Doshi. What are some of your top clients telling you? What is it that companies, and let's talk about corporates, because there are very many queries both on services and goods front, and people at large are worried about rates. But what are top corporates in India worried about?
See, essentially most of them are ready, in the sense broadly they have done their work, so they are ready. The concern really for them are twofold. One is the transition, because they are not very clear as to how the transition provisions will work and how will they get input tax credits or some taxes, some refunds which are outstanding, what will happen. So that's one area where there is concern. Another area where they have concern is that their vendors are quite a few of them are not really fully ready, though they are working with them, but still they are not ready, and therefore initially they will have some challenges because vendors will not be able to give them an invoice which fully complies with the requirements of GST law. And of course their one solace is that the government has been telling that don't worry, initially there may be some glitches, some problems, but we'll have to find ways of sorting that out, and so therefore perhaps they will have to then work with them and get them corrected going forward.
Okay, fair point indeed. This will really be pain and work in progress. But Satya Poddar, how long are businesses expecting this pain to last? And my own question really on this front is, while the government has given the 2-month period as a relaxation period for returns and things like that, do you believe there will be a need to extend that period, or do you believe that things will settle down, teething troubles, the fear of the unknown and all of that will be taken care of in the first 2 to 3 weeks?
In my view, there are two aspects of GST settling down. One is purely the process of filing the returns, uploading invoices, and moving on with those issues. Those issues, I hope, and I'm fairly reasonably certain that in 2 to 3 months' time they'll settle down. But other aspects of the GST regarding which tax rate to apply to which supplies, whether I apply the tax rate as a composite supply, multiple supply, they're very complex determinations. Just to give you an example, government has set the tax rate on the hotels, which are 0% below 1,000 rupees 12% from 1,000 to 2,500, 18% to 7,500, and 28% above that. Now, if you look at the legislation or the rate schedule, it says the tax rates are based on rate per room per night. And this morning I got a call from one of the clients that I'm renting an apartment with the 2 rooms. And the cost of the 2 rooms is say 2,000 rupees. But if I calculate the cost per room, it's only 1,000 rupees. Do I pay 0 tax rate for below 1,000, or do I pay the 12% tax rate because of the 2,000 rupees? And those are the questions which are numerous. No matter which sector of the economy you look at, because of the multiple rate structure, you have very complex determination. You go to a bazaar, you go to the mall and you buy Diwali hamper. Is the tax rate on Diwali hamper, which has apples which are tax exempt, chocolates which are taxable at 28%, and the soft drinks which may have a tax rate of 40%, what tax rate do I pay on that hamper? So there are questions of that nature which I suspect will continue forever, and the system will never stabilize. So in that sense, what we are going to see on July 1 is only a beginning of the reform process. But we'll start the reform with a solid foundation of a platform which is fully digitized and fully harmonized.
No, I don't think anybody is denying the fact that what we are beginning to see is just the, is just the first step or the giant leap that one is taking into reforms. But of course, going forward, that process will have to be improved. I want to specifically talk to each one of you about anti-profiteering clause, because that's an issue that we're getting a lot of queries, not just from investors and callers who are calling in, but from members of Indian industry. There's a lot of fear out there, a fear of could there be harassment? When will it be invoked? Let me ask both you gentlemen here in Delhi. And Sandeep, let me ask you, anti-profiteering clause is something, and former Finance Minister Chidambaram was with us. He says this defies market economics. Why do you need an anti-profiteering clause? Because competition should take care of this. Are your clients specifically worried about this?
See, undoubtedly, there are certain apprehensions with respect to anti-profiteering provisions. And the most important being that can the government by a regulation decide how much profit a company should make or should continue to make on a business which it was making prior to introduction of GST? Can it not decide to increase or decrease, at least increase their profits? For example, for some companies do also fear that if they were operating at losses, do they now mandatorily continue to operate under losses for next 2 years because anti-profiteering says that they have to pass on the benefits of the GST, but the fear is, can they, after passing on the benefits of the GST, can they increase their profit margins? So those kinds of doubts are there in the minds of the company. Plus, obviously, the way the system is supposed to work is that now, after you go through the detailed rules, one of the interested parties has to complain, and interested parties would obviously be one of the customers. It is based on a complaint system. And post a complaint, the screening authority or the standing authority and the director's safeguard would undertake a detailed analysis to see whether the benefits was passed on or not. But how will this analysis be carried out? What would be the calculation formula? Would it be done on a gross profit level or would it be done on a product level? All those clarity is missing, which is also adding to the confusion in the industry.
Okay, so there is clarity that has been sought at one level, Mahesh. If I may throw this to you, the anti-profiteering clause, I mean, the point that Sandeep is making, that should I continue to be somebody who's been incurring losses, or can I look to, upstake my profit margins? But the flip side to that entire argument is that the whole idea of an anti-profiteering mechanism is to see whether you're passing out the benefits or not. And the other thing is that you need to keep inflationary pressures under check, and there could be inflationary pressures on account of that. So, while on one hand the government is justified, but on the other it's also defying market economics. How worried are customers and clients at this point in time?
I think they are extremely worried, and I think it's important to spend a little less over a minute on the genesis of the anti-profiteering. Like you rightly said, the government is wanting to keep a check and balance on inflation, A. B is that since the government is simply saying that today if an effective tax on a product is say 24 to 25%, if we reduce the rate down to 18, there should be a methodology whereby industry ensures that that price or the tax deduction and reduction is passed on to the customer. this is not a concept completely new in India. It's new in India because we are GST for the first time, obviously. But it's been a concept that's tried and tested in Australia and Malaysia. So with that, I do think some more guidelines, like Sandeep said, would be useful for clients and industry. That should this really apply to a B2B supply? I don't think so, because if it is to contracting parties who are businesses and it is not affecting a consumer, it should probably be outside the net. The clear guidelines should be brought about. Should it be computed at a SKU level, at a product level, and that at least would have a guidance? Or is there a cushion that if somebody is suffering a net loss, because we all know some products, the industry may be keen to be at a market penetration with that objective, pricing it very competitively. Now, if this rate is reduced, should they be reducing? Because if the rate increases, I don't think they have the flexibility to increase either. So it is worrying, but I would only like to calm the trade, the nervousness in the trade, that this is more, I would think, for the brands to take care first, because they determine the pricing through the supply chain, and go by the guidance what your brands are, giving you.
You know, I'm going to take this to Abhishek Rastogi. And Abhishek, you know, while I agree with both Sandeep and Mahesh at one level, I think the people in the government that we've been speaking to, whether it's the Revenue Secretary or the Chief Economic Advisor, or in fact even Finance Minister Jaitley themselves, they believe that anti-profiteering is important to cushion the customer. And, you know, they believe that this is not going to be our first go-to thing. We will use it very sparingly. Now, we've heard this in the past. We've heard New Delhi talk one language and the taxman on the ground speak quite a different language. And that is where I think the fear is emanating from. Do you agree with me?
See, I think to a very large extent, the comment is that is there a necessity of anti-profiteering provision at all? So the answer to that is yes, of course, there is a necessity, because now this provision is making the companies think to pass on the benefit to the customer. So there is no doubt that the anti-profiteering measure has to be there in the statute. But what is missing, actually, that has to be seen. And before I go to that part, what is missing, I think we need to understand the constitutional validity itself, because we have to examine two aspects. And the first aspect is there a excessive delegation to the executive? So to that extent, can it be constitutionally challenged? The second part which comes into play is that some of these measures which have been incorporated in the rules which have come, and one of that measure says that even the businesses can be deregistered. Now, deregistration of a business, is it constitutionally valid? Will it contravene the provisions of Article 19(1)(g) of the Indian Constitution? Should the demand, supply and the economics take control of the prices, or the stringent measures like deregistration of a business would address such issues? And even if the deregistration happens, whether it will be temporary, whether it will be permanent, there is no clarity on that. So that's the part on the constitutional validity. But if we see a couple of these missing points, which of course one of the most important aspect is with respect to the pricing mechanism. I mean, of course, the statute tells about the difference in the rate on the output tax and the enhanced tax credits which you get. So while those broad principles are there to estimate the price, but what happens in a situation wherein there are different chains? There is a manufacturer, there is a distributor, there is a retailer. The customer has a privity of contract only with the retailer. So how would that pricing mechanism work? How would anti-profiteering be determined? Of course, it's not easy to determine in different cases, because for goods it could be a different mechanism, for services it could be a different mechanism, and hence the question arises, what happens to services like insurance services? While the tax rate may have marginally increased on the insurance services, but if today I have a service which I have taken for 5 years and I need to take those insurance policy services, etc., for next 4-5 years more, then how do I get into what increases in the credit pool chain? So I think those are all aspects which are difficult to estimate right now. It requires a lot of number crunching. And hence the last point which I want to make in this regard is, can there be a misuse of this provision by the customer? And mind you, the language which is coming in the rules is that it is not only the customer who can go and file this. At some place it uses or any other person. So, I mean, if that leads, if that's the situation, then in certain cases, any other person apart from the customer can also at least initiate. Now, if there is a prima facie evidence against the company, then this gets initiated, and of course it goes to the number crunching and all those detailed scrutiny. So I think the bigger problem would arise if this provision is misused, and I think that's why the India Inc. is more bothered of the misuse.
Right. Okay, Abhishek Rastogi, hold your thoughts there, because I do want to turn focus and talk to you, gentlemen, about something which is more important, which is the inflationary pressures. Shrikant Kamat, do you buy this theory at all that to begin with GST may be inflationary? I mean, even the Revenue Secretary said we need to watch out against. Or do you believe simpler transportation, cheaper logistics, input tax credit will take care of some of those? How crucial will input tax credit be to offset pricing pressures?
See, basically, GST as a concept itself has been conceptualized to bring down the cost of goods and services and have a very seamless supply chain. Now, with this fundamental assumption that credit will be available across the chain to all the stakeholders, all the players in that supply chain, in that case, if there are no accumulation of tax credits, automatically the cost of goods and services are bound to go down. Now, I have been listening to the discussion on anti-profiteering also, and to come to your question slightly later, I would first also want to address that government here has the reason for having an anti-profiteering clause in the statute is purely because GST as a tax reform, foremost, it tries to protect the interest of the consumer at the foremost level. If that interest comes by way of reduction in tax cost, if that tax cost is not getting reduced because of the seamless supply chain and the seamless input tax credit mechanism, then government would like to believe what are we talking about if the industry is not going to pass on that benefit. So the anti-profiteering clause is going to trigger only for the transition from the current regime to the GST regime. Once you are into GST, nobody would like to really look at how you would price your product, your goods and services, because eventually, obviously, the demand and supply would take over. This is only for the interim period, and I think government is very correct in applying this kind of a provision. And in terms of the constitutionality or the legality of the provision, I don't really see that as a challenge, because the consumer has all right to demand a reduction in cost of goods and services if obviously earlier there were accumulated tax costs and now there are none in the supply chain. So and I think there is very objective data available at the end of each business entity, whether it is a B2B transaction or whether it is a B2C transaction. Each and every business entity has a clear idea of where the tax accumulation, where the tax credits were getting accumulated earlier and where they are not going to get accumulated now. So to that extent, if we clearly have an idea, and then we can definitely try to load that benefit on product by product and eventually bring down the cost of each product or each service that the business entity is providing. So I think eventually it is not so difficult, and for that matter GST law is quite simple. I would like to disagree with people that it is complex. It is fairly simple. In fact,
okay, Shrikant, I get your point. Yes, yes, Shrikant.
If we have a
Shrikant, I get your point, but I have a viewer. I get your point, Shrikant, but I have a viewer who's been holding on for very long. I'm just going to go across to him and come back to each one of you to take more queries and to answer some of the questions that are being raised. Sunil Chaturvedi joins us from Mumbai on the phone line with his query. Sunil.
Hi, thank you very much for taking my call. I'm a member of a cooperative housing society managing committee, and my question is on if there is any impact of GST on cooperative housing societies. And if there is any impact, what steps we need to take to comply with the GST norms? Thank you.
Okay, can we take this question with Rohit Jain, please?
Clearly, today cooperative housing societies have been discharging service tax at the rate of 15%. Under GST regime, one simple impact is that rate of tax has now gone up from 15% to 18%. So 18% is the levy of GST on the cooperative housing society when they charge these maintenance charges and any other charge from the members of the society. But at the same time, there have been some additional credits which would now be available to the societies which were not available earlier. Say for example, society buys certain goods, buys certain equipments, done some modernization, upgradation of their property, and they buy a lot of goods and equipments. In that context, whatever was the excise duty payment or a VAT payment which was happening, it was not available to them as a credit. Now all of this will start flowing them as a credit. So net there would be some impact of 1-2%, but overall it would be a good move, because all the taxes that they pay on their sourcing will now be available as a credit while paying GST on output side at 18%.
Okay, so Sunil, I hope that answers your query, but there is a, okay, I think Sandeep wants to add on to that. Sandeep?
Yeah, just one point. With respect to the cooperative housing societies or RWAs, there is also an exemption with respect to the maintenance charges up to the extent of 5,000 rupees per month, and that exemption from service tax has continued to the GST. So to that extent, there should not be any GST implication if the maintenance charges per month are less than 5,000 rupees.
Okay, okay. Let me take this across to an involve.in query that's coming in, and that query has to do with a car purchase, and I think this query comes in even in our parlance very often. Will road tax have to be paid for a car purchased in one state and brought to another? Mahesh, you want to take a go at it?
It's actually outside, road tax is outside GST,
yes.
and therefore road tax independently continues. So today if you buy a car in state A, in addition, that time you would have paid the state GST, and you would have paid the local tax and the road tax of state A. When you move the car to state B, there are other provisions that say that the road tax of state B applies. Some of the states have some road tax, credit that happens, but this is clearly outside the GST, and therefore whatever is the practice currently will continue under GST as well.
Okay, there's one more query that's coming in, and largely on the lines of what Neelima from Delhi had joined us to ask, that she has, her consultancy business has revenues of under 20 lakh, and she's migrated to the GST. What should she do? This query is also coming in from someone who says, this is on involve.in, and can we please take this out? This says, my annual sales is less than 20 lakhs. How do I now opt out of GST registration? Would any of you want to take a quick go at how do you opt out? Is that easy at all? Abhishek, you want to take a go at it?
Yeah, I can take that. See, the registration which has been given during the transitional phase is only a provisional registration. So the provisional registration does not mean that you have been permanently registered under the GST provisions. So it is just a procedural thing, and you can just opt out, because the registration which you have got is provisional registration, and it does not get converted into the permanent registration unless and until you opt for it.
Okay, I am given to understand I have a caller joining in from Bangalore. If I got the name right, I think it's Deepa from Bangalore. Go ahead, Deepa.
Good evening. See, I am a service provider of financial services to various mutual funds. Okay, and they have only offices located in Bombay, and I receive income by way of commission from them, and my income is below threshold of 20 lakhs. And being interstate, do I have to register or not to register?
I'm presuming if your income is under 20 lakhs, you would not want to, but I'll still get a tax expert to answer that for you.
I don't want to register, but is it necessary that I register? Because it is interstate and the threshold is 0.
Sure. I'll get Bhavna Doshi to answer that. I'll get Bhavna Doshi to answer that question for you.
I think as far as I recall, so far as mutual fund agents are concerned, the provision which was there earlier, the reverse charge where the funds pay, I think it's continued. So most likely it's reverse charge, but I'm not very sure if someone else can pitch in. My feeling is that the reverse charge is continued. So therefore the agents, mutual fund agents don't have to register.
I'll get anyone on my panel to volunteer and take that. Put your hands up and you can, the question is all yours.
Yeah.
Okay, so
if you're making interstate
okay, let me just
supplies,
actually throw this.
you have to register because the 20 lakh, sorry.
Sure, Mr. Poddar, go
I was
ahead.
saying that if you are making interstate supplies, the 20 lakh rupees threshold doesn't apply to you. So that's the very first answer. Now, whether the mutual fund agent services are subject to reverse charge or not, I'm not very clear on it. My impression is that no exemption is provided for the mutual fund services. Whether it's still subject to reverse charge, I need to clarify that.
Okay, I think Shrikant wanted to take a go at this question. Shrikant?
Yeah, one needs to understand that what exactly is the place of supply rule, because place of supply plays a paramount, has a paramount role to play in determination of the tax liability also. So first of all, we need to understand for an intermediary. Now, a distributor of mutual fund products typically becomes an intermediary in the parlance of GST law. Now, we need to first understand what is the place of supply rule that will become applicable to an intermediary services, and the place of supply for an intermediary becomes the place of, where the intermediary has his place of business. So, to that extent, if we are talking, the gentleman who posed that query, if he is in state A and he is providing that service to someone in state B, now the place of supply for that service, for intermediary service, becomes the state A where the gentleman is located or has his place of business. Now, if he is going to raise an invoice, so the invoice has to be raised so you have to determine whether it will be a interstate supply or it is going to be a within state supply. So, to my mind, it is a within state supply. It is not an interstate supply because your place of supply is in the same state where your place of business lies. So, to that extent, if that is the case, and then it doesn't, if it isn't a interstate supply, then are you really required to obtain a registration? The answer is clearly no as far as Mr. A is concerned. But now let us talk about the mutual fund, or let us talk about the recipient of the service. But if the recipient still wants to engage his services and the recipient still wants to do business with an unregistered person, then I am afraid there is a clear liability on the recipient on a reverse charge when it deals with unregistered persons.
Right. I'll take a quick breather and I will be back with an expert panel that's going to answer all your queries, and we will also take a discussion forward on the nitty-gritties of the GST. All right, let's take this across back to our battery of experts who continue to be with us, and some new people joining in as well. It's a pleasure chatting with Satya Poddar, Bhavna Doshi, Abhishek Rastogi, Rohit Jain, Sandeep Chilana, Shrikant Kamat, Rohit Jain, and of course Mahesh Jaising, and Gautam Thakkar joins us as well. I really think we should get down to the specifics and talk about various sectors, and let's begin with sectors that are going to be majorly impacted by GST. Satya Poddar, let's begin with you. You know, Pawan Goenka joined us just a short while back, about an hour back, and he said that the impact is going to be huge. It is going to change how businesses are done. He is very concerned about supply chains and vendors and small distributors not being completely ready. As far as auto is concerned, would you assess the impact for us?
Auto industry? I think auto industry has 2 or 3 aspects. One is the commercial transportation, then you have the motor vehicles for consumer use, cars mainly, and then you have the buses and the trains. So let me leave aside the trains part. In the auto sector, in the consumer automobile sector, generally it's more or less neutral change. The prices have come down a little bit for the premium cars, and for the small cars, prices are more or less what they were before, or the tax content is the same as before. In the trucking industry, if I include that in the auto sector, that's where the GST impact is completely negative. and that's because the government has applied the tax rate of 5% on the transportation, road transportation, but in exchange for the 5% tax rate, the transportation sector has been denied entirely any credits. So now the trucks will come at 28% tax rate and no credit will be allowed. So where is the opportunity for growth and investment in that sector? My preference would have been to have a tax rate that is little more meaningful than 5% rate and allow the auto sector, the transportation sector, full input tax credit. That's overall, that's where the economy would have improved. That's where our logistics costs would have come down. But the way the GST is designed, those benefits will not materialize.
Okay, Gautam Khattar, if I may bring this to you, the GST is likely to give a boost to the premium sedans and the SUV segment. What happens to demand?
Definitely you're going to see a rise, and you're seeing that already in a move to transition to GST. See the discounts the automotive industry is showcasing today. I think that's just a transition phase. Probably it's also coming from the fears of the dealers of what do they do with the existing stock, because there are inherent taxes which are embedded as cost. So there are transition provisions. So there are benefits which they are taking in and passing on those benefits in terms of the discounts. So this trend, which fear is that it's only limited for the transition phase, I don't think that is the case. It will continue. You will see a better pricing, largely because of these luxury cars coming in today in CBU form, completely built units.
That's right.
There are inherent tax cost. So that definitely is going to go down, and you would see a decrease in prices for these luxury cars.
Okay, a decrease in prices in the luxury car and an obvious fillip to demand. But Rohit, Jain, if I may bring this to you, the contours or the landscape of the auto industry is all set to change. Whether I look at it from the point of view of the producers or from the point of view of the consumers. Come 1st of July, how does that landscape change? I've addressed one part of the query, which is SUVs and sedans, premium sedans. But what about the rest of the industry at large?
See, I think clearly the auto industry is going through a significant changes as far as their supply chain is concerned. Let's take in terms of the producer. When the producer buys various components or the parts, the thought that all of this should be localized in the first place. And most of the auto industry works on the just-in-time delivery. So most of the vendors of auto industry have also been located near to the OEMs, and they supply them on charging local VAT. Thereafter, auto industry does the stock transfer to various their depots, and when they do a stock transfer, they lose on lot of credits as far as VAT is concerned, because if you do the stock transfer outside the state, you are not entitled to a credit in terms of the VAT charged by your vendor. At the same time, because of having just-in-time delivery, auto industry, auto vendors have also set up lot of capex and invested into a plant next to the door. And at that stage, they buy their raw material from outside the state, on which there is a CST of 2% paid. Now, in an overall supply chain, if you look at it, the suppliers to OEMs, they will likely to be saving some sort of a CST 2% on their raw material. Then vendors, when charged to the OEMs or the original car producer, they charge VAT, which is in most of the cases of stock transfer they lose, and that also they are likely to save. And in turn, then we also have various other levies like NCCDs and others. It's not only excise duty, which are also likely to be, which are subsuming under the GST. So on net basis, overall, there will be no tax leakage which will happen, and therefore the entire supply chain needs to be reviewed. In fact, many of the car manufacturers have not only gone to tier 1, tier 2, tier 3 level and renegotiated prices, so that the entire flow of credits and any tax blockage which was earlier happening have now been effectively passed on right up to the consumer, and therefore the overall price impact has not been felt if there is any additional tax burden. So the entire supply chain is going to be changed, and they are effectively looking at how can, if there was earlier tax leakage, if there was earlier tax blockage, that should actually flow through right up to the consumer, so that the prices will be rationalized. no impact felt as far as if at all any increase in the tax rates.
Okay, Rohit, hold your thoughts there. I've also got Mr. L. Badrinarayan joining us on ET now. Thank you very much for being with us. We've got down to talking about specific sectors, and one such space is, of course, e-commerce. There was almost mayhem there when they were asked to collect TCS, and now, of course, it has been delayed by over 2 months, but the Revenue Secretary, in a conversation with us, very categorically said this has just been delayed. They need to get the systems in place. There will be no other thing that will be done. How damning is this for e-commerce? Do you believe this is going to create a mayhem of sorts, because they have so many suppliers that supply on their platforms, or sellers that they sell on their platforms?
Yeah, and I think, e-commerce is going to be one area where I think there's going to be a lot of impact. Okay, I think world over, electronically supplied services and electronic commerce is the new tax thing to look at and see how to do it, because there's a lurking feeling across the world that e-commerce is not paying its dues in terms of taxes. But I think what we are trying to do is bring in at a stage where e-commerce is still very nascent in our country and try to comply, and we're trying to make them comply in situations which are going to be onerous for them. Just to give an example, if you go to an e-commerce portal today and if you were to purchase a hotel room, then there is a requirement for the e-commerce operator to discharge a tax collection at source of 1% on any payments that are routed through him. That sounds very easy to comply, but it's very technical and difficult for the reason. One of the big questions is, where does he take a registration? Does he need to take registration in every state where the hotel is located? Because the hotel always charges the local CGST and SGST. Is it okay if he has a representative in every state? Or is it enough if he has a chartered accountant in every state who can take registration? Because is he really making supplies from these places? It gets very tough also because e-commerce operators tend to also have their servers, their infrastructure and all in different places, both inside and outside India. That also creates its own issues with respect to where is the location of the supply happening from. Then of course you have issues relating to on the e-commerce portal there are so many people who are involved. There are suppliers, for example, if you take a Flipkart, Amazon, you have vendors, but you also have agents who are facilitating these transactions. You have a courier company which kind of forms the bedrock of this. All of these become make e-commerce very complicated, and especially at a stage where e-commerce is just picking up in India, to have something which I feel is very, very difficult to comply for the e-commerce operators, and everybody is trying to figure a way of complying with it. I see it is tough. I do understand that there is an anxiety in the government to tax and collect electronic supplied services and e-commerce operations to pay their taxes. But I think there will be a lot more that in terms of clarification and amendments that I expect in the coming months to ensure the e-commerce operations see this GST to be smooth for them.
Okay, many clarifications still sought for, many clarifications still expected. But Sandeep, Chilana, I think you have a point of view to add on e-commerce.
One more point I would want to add, that for e-commerce industry, another important aspect is that any person who is engaged in supply of goods through an e-commerce operator is not eligible for the composition scheme. So dealers who are below 75 lakh rupees of turnover cannot operate through an e-commerce operator if they want to opt for a composition scheme, which has also become a very big pain point.
So give us an example. What would you mean?
Say for example, a small boutique who wants to operate through an e-commerce operator.
Who wants to say sell on Amazon?
Sell on Amazon would have wanted to go for a composition scheme and have paid tax through composition scheme, reducing the compliance to quarterly level. Right. Cannot do that because there is a specific restriction with respect to composition, that you have to take registration. You are not eligible to opt for composition scheme if you are operating through
that's an important clarification. That would be very tough for some of the boutique guys who would want to do this, the smaller place. You want to add to that as well?
I just want to add, because I've been engaged with the government on this front, that this is even more hurtful for the dealers less than 20 lakhs. So a homemaker selling pickle and papad or homemade chocolates is mandatory required to take a registration. Now, what's the good thing that's happened is, along with the deferment of the TCS, the government has actually deferred mandatory registration for the first 2 months for these sellers who are otherwise ordinarily exempt. Now, I do hope and believe that that exemption should be given carte blanche even after the 2-month period, because otherwise that really in some sense discriminates a seller who's otherwise exempt but just has say 5% of his sales on the platform and he needs to get into the GST net.
Okay, fair point indeed. I also want to touch upon, and very quickly with Mr. Badrinaran, if I may begin with you, purchase from unregistered areas. I was just having a chat when we took that break with our experts here, and they said that's one area worth touching upon. Again, that's a grey area. One doesn't know what the clarification there will be, but how tough is it for businesses to cope up with this when you purchase from unregistered areas?
As you know, unregistered dealers is something which the government wants to discourage the businesses from doing, because it brings people into the tax net, and ultimately for any tax like GST to succeed, you want to increase the tax base to the maximum so that over a period of time you can reduce the rates. One of the ways of doing it is to kind of tax the unregistered dealer who's making a supply to a registered dealer. Personally, I don't think that's a great move, because it really kind of puts the unregistered dealers at a disadvantage as compared to registered dealers, because one, you're not able to sell, especially if you're below 20 lakh threshold limit, if you're not able to provide these services, and there's really nothing which is in terms of economies of scale that you can offer in order to be able to bring your prices down. So really disadvantage to have unregistered dealers in the system. And also it really causes a lot of grievance for the big businesses, because it's not just the question of just receiving something and then paying off. For example, let us say your employee goes on travel and is stayed at a hotel, had food, taken taxi and comes back and gives a voucher. You now to figure out what are the services being rendered to this, find out what is the rate to be applied, and then pay this on reverse charge basis. It's all very onerous. It's very difficult to deal with, especially big companies will find it very hard when they have to. It's not possible that every service or any supply that they are going to receive is going to be outside the GST net. So I think I'm not a great fan of this unregistered to registered, but I guess it's got a purpose in trying to bring the tax net larger. There could have been other ways of doing it, but I guess this is what the government is going on.
All right, 4 hours, 29 minutes to go for India's tryst with GST, but we've got to call it a breather here on this show. Thank you very much, gentlemen, for being with us. Satya Poddar, Bhavna Doshi, Rohit, Jain, Sandeep, Chilana, Shrikant Kamat, Abhishek Rastogi, Mahesh Jaising, Gautam Khattar and Mr. L. Badrinaran. We take a quick breather and we come back with plenty of programming right here on the GST.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.